Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, global markets reporter at Nasdaq, coming to you live from Consensus in Austin, Texas. Joining us for this segment, we have Piers Ridyard, CEO of Radix. We're here to discuss using Web3 and DeFi to manage assets and identities. Piers, it's great to have you with us. Welcome to TradeTalks.
Thank you very much for having me on.
Let's talk about the developer experience. How is this impacting growth within the space?
Yeah, I mean, like you see it every day in crypto, the number of hacks and exploits that are happening, even today where, you know, $100 million hack is not particularly news when it happens within the DeFi space. And a big reason for that is how difficult it is actually to build smart contracts. So we've got this idea that it would be great if you could build financial applications on top of public ledgers, but the reality of it is that they're constantly being hacked, exploited, or mistakes are being made, and as a result, tens or hundreds of millions of dollars of people's funds is going missing. And Radix is basically saying that's not good enough. You have to have a ledger which you can trust, which you can rely on. If you create an asset on it, that asset isn't suddenly going to disappear, isn't suddenly going to be stolen. If you're interacting with a financial application, that has to have the same trust to it as dealing with a bank. In fact, it should have more trust to it because that's the whole point and promise of these public ledgers. So what Radix did is we created a radically new stack, taking the ideas of what Ethereum and other smart contract platforms have done, but making it much, much safer to build smart contracts. So you can still achieve the same things, but without all the hacks and exploits that you currently get.
Do you think there are too many networks out there at this point, or is interoperability getting better where they're able to communicate and interact with each other?
Yeah.
To me, that sounds like that's a big part of this.
Yes, interoperability is a huge part of it.
Right.
And so there are, protocols coming along like Layer 0, like Axelar, that are bringing messaging across these platforms so that from a user point of view, it is completely and utterly abstracted away. I don't need to care what ledger I'm being
You just want it to work.
I just want it to work.
Right.
And so I think that there's going to be an argument for there being more than one ledger, because specialization has happened in almost every industry. And as long as you have that interconnectivity, I don't think there's any problem that there are many networks. Are there too many networks? Yes, I think we're in a innovation phase of an industry where what we're trying to do is work out what the best way in which you combine tech with practical applications to create something that's actually useful. And this is creative destruction. Right now we're in a phase where people are trying all of these ideas, and some things will start to emerge as being the right way of doing things.
Right. Well, I mean, look, for a lot of people, it's not their first rodeo. We went through this, right, in the late 90s and early 2000s, and you saw how, the internet is an example. You can't even imagine life without it, right? It sounds like what we're learning, how we can practically apply blockchain and other emerging technologies, that's almost like the next iteration of it.
Yeah, 100%. And this is why we created Radix. We created Radix because we saw an opportunity to take the ideas that are currently being built within the public blockchain space, but refine them so that they could actually work for what we see as mainstream. Like, if you want a mainstream adopted platform like the internet, the first thing is it has to be scalable enough. Like, if the internet stopped at being able to scale at 100 million people or 200 million people, we wouldn't be using it today because it would be capped out. It has to be secure enough because we're talking about people's assets and people's identities. So security has to be a fundamental part of how it works. And that's not just for the protocol, but it's for what you build on top of it. But the last thing is it has to be usable. Like, the internet didn't become mainstream until things like the Apple Macintosh or the iMac, made it accessible. Oh, I can have it on my kitchen table at home, and I feel completely able to navigate it. And this is what we brought, is this idea of how do you make a mainstream crypto user experience that isn't intermediated. You don't have to go to an exchange to use it, you don't have to go and use an intermediary to use it. You can use a public ledger directly, but with all of the problems that you currently have. So if you've ever used a crypto wallet, have you ever used it?
Of course.
And the seed phrase is confusing, I have to write this thing down, and if I lose it, I lose all my money. The interaction with dApps can be very confusing. I have to sign this thing, I don't know what's happening with my money. And all of the interactivity that we're currently seeing is sort of Web 1 of crypto. And what Radix has done is, by leveraging all of the stuff we built into our stack, we've created this user experience that's incredibly intuitive. Every time you do an interaction, you understand exactly what you're doing. You don't have to worry about seed phrases, and you can connect to anything seamlessly, rather than having to manage all of these applications and all of these intermediate steps that makes it confusing or scary for the everyday person to do.
Yeah, you want it to be simple as, okay, I know how to download an app, I know how to navigate an app. It's interesting, one of the main stages are behind us, and they were having the debate about public versus private blockchains.
Yeah.
Do you have an opinion on that?
Yeah, I mean, absolutely. And the answer is the same debate as we had with intranet versus internet, right? Like there was this famous paper that Microsoft released in like 1994, 1995, and it's like the future is the corporate intranet. And like the reason that the internet is so powerful is because you can interact with anyone immediately without having to agree up front how you're going to do that. And it's the same with the public blockchain. If I create an asset on a public blockchain, I can pass it to you, but then you can pass it to anyone. And if I want to build an application on top of that public blockchain, all of those users that are already on it, and all of those applications and all of those assets that are already on it are instantly interoperable with what you've created. If you create a private blockchain, you've suddenly got a network that you can only access if you're asking permission. And it's the same reason, like if I wanted to go and create a trading product today against JP Morgan,
right,
I'd have to call them up and go through a 3-month process of getting them to give me access to their APIs, and they may not do it. On blockchain, if I want to create a trading product, I can do it today. And I don't have to ask no one's permission to do it, and I can instantly start using the assets that are available on that.
See, and that's what's so interesting when you hear about some of the larger financial institutions thinking about offering a stable coin on their system.
Right.
Right? I mean, it's only usable for very specific use cases, whereas, you know, if you have something that's national as an example,
yeah,
then it's interchangeable.
Yeah, and they're thinking only from the point of view of, hey, blockchain is a useful back-end system that we can use to save money. They're not thinking about it from the point of view of blockchain and public ledgers is a new paradigm for creating finance, and we can access new customers and provide new products and services using that. They're only thinking about how does this save operating costs, not what does it represent as an opportunity. And the other reason is that because it unbundles the bank, right? If I build a DEX today, a decentralized exchange, I don't have to go and get the base of capital and work out how to do lending and borrowing. That already exists on the ledger. I just have to slot my particular application into it. So now you have much more creative destruction from the innovators and the developers that can come and build against it, where a small team can create something that only a bulge bracket bank could create in the past, because all of the capital, all of the users, and all of the other applications that you need to rely on to create a complicated financial product is already there. You just have to use the Lego blocks to bring it together.
Yeah. It's interesting. Can't wait to see how this unfolds. Appreciate the insight, Piers. Thanks for joining us on Trade Talks. And thanks for joining me from Consensus. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.